Hi, I'm Ross Mayfield, investment strategy analyst at Baird, and we are back for another weekly update with our friends at Strategas. Today, I'm thrilled to be joined by managing director and technical strategist Todd Sohn to talk all things markets. But first, Todd, how are you doing today?
Hey Ross, I'm great. How are you doing?
Doing really well, headed towards the holiday season. So, a couple kind of year end items to look at with you. And I wanted to start with something I saw you say the other day, which was to describe 2023 as the year of the money market fund. Referencing the kind of insane inflows into that asset class. But I wondered if you could talk about it in detail and tell us what it means for investor sentiment.
Yeah, it's a great question and a favorite of mine that money market funds have seen over $1 trillion in flows this year, right? That's roughly 25% growth for that product set. And keep in mind, money market funds, while they are basically risk-free, they're the most boring asset class in our industry. And so investors are clearly happy that they've had 5% yields for the first time in over 15 years or so. But bigger picture, I do think it reflects a general apathy for the equity market. And keep in mind, while cash is comforting, it can present a real opportunity cost for investors. Yes, you get your 5% return, but at what cost? The S&P is up 20% this year. Just keep that in mind. Now, will some of that cash come back into the market next year? Perhaps, especially if stocks continue to broaden out. I suspect some of that will remain sticky just due to the demographics of the United States, right? You have a lot of retirees perhaps just sitting in there. But again, $1 trillion that has led all categories in our flow are by far equity ETFs much more restrained, and I think presents a very favorable structural sentiment backdrop going into the next year.
Right. I mean, contrarian sentiment is a nice, reason for a pop, but ultimately to sustain a bull market, you need bulls, and there needs to be, that quote unquote cash on the sidelines to kind of be fuel to that fire. So it will be interesting to see. Looking elsewhere as we head into 2024, I know you all use that flow data and sentiment as an idea or as a way to kind of sort for contrarian ideas. Where are people not looking? What's not in favor, but has a good setup otherwise? What are a few areas, either within the U.S. or abroad, that kind of hit those boxes for you?
Yeah, and we use ETFs, right? They are our psychologists of the market. They're a great read on sentiment as well as providing low cost exposure to all sorts of different asset classes for longer term investors. And on that score, two that really stand out here are industrials and Europe. Both are a complement to the mega cap growth exposed S&P 500, right? But what I do find surprising though is that industrials leadership has been pretty firm for much of this year, especially on an equal weighted basis. But flows to industrial related products are nowhere near prior spikes, say, compared to 2016 or in 2020. So I think that reflects a sector that is being ignored, and we liked when sectors provide leadership without the endorsement of major inflows. And when you dig down at the product level, much of the money is still going to defense-related products rather than broad-based industrial. So you're missing out on the building product and machinery-type exposure, those economically sensitive sectors that have actually done very well. Europe is also a counter to this, right? Europe has pretty heavy industrials exposure too. And after a bit of outperformance earlier in the year, you saw inflow surge. That has completely reversed, right? The flows have dried up. We've seen outflows from pretty large model portfolios towards Europe. And I think that presents a nice little contrarian case for Europe into next year as well. Now, will outperformance be sustained? That's a very difficult question, right? International hasn't worked against the US in some time. But I think if you're looking for something away from the mega cap growth exposed, just to balance out your portfolio, the industrials and Europe really makes sense on our end.
That's great. Well, let's end with that, kind of mega cap tech, behemoth at the top of the U.S. market. Even after the last 6 weeks rally, which has seen the market broaden out quite a bit, this will still likely end as one of the more concentrated performance years in recent history. What does that tell you about the market? Does the market need to broaden out into 2024 to sustain this rally, or is the concentration at the top of the market something, a bit of a red herring, something that's maybe not all that important to forward performance? How do you think about it?
Yeah, I agree with you on the red herring part, right? When you have the largest names in the index going up the most, they're clearly going to have an outsized influence. And I think that's what's happened for a majority of this year, right? The biggest names, such as Apple, Microsoft, Amazon, Google, clearly powering the cap-weighted S&P 500. Now, yes, they have provided about 80% of the year-to-date gain, but forward performance does not have any sort of relationship to compare to what they have given. Now, you're starting to see the equal weight S&P 500 perk up. You're seeing international equities perk up. So there are plenty of areas that are working. They just don't have as much influence on the benchmark. We had one of the better new high data readings for the S&P 500 recently, so that should just participation is broadening out again. That's great for forward returns. You'll get speed bumps here and there, but it provides a very constructive backdrop into 2024. I would not fear the strength from these mega cap names. And again, if you need to balance out your portfolio, look to the industrials, look to financials. All these areas are starting to perk up. And it's far more than just, say, the 7 or 8 stocks that I think have gotten the most of attention for 2023. Participation overall is improving and broadening out, Ross.
Awesome. Well, that's great context heading into year end. Todd, we appreciate the time as always and hope to talk to you again in 2024.
Thanks, Ross. Happy holidays.